Is DHL Post Service an undervalued stock option? I am quite interested in the company from a first glance, but I'll analyze the company in more depth. So stay tuned until the end to find out my final decision, and as always, all is said with educational purposes and is not meant to be taken as financial advice. Deutsche Post DHL Group is one of the world's leading main and global logistics companies with a presence in over 220 countries and territories. The company provides a wide range of services including international express delivery, freight forwarding, warehousing and distribution, and of course supply chain management. DHL's business is divided into four main divisions: DHL Express, DHL Global Forwarding, DHL Supply Chain, and DHL E-commerce. The DHL Express provides international express delivery services, the Global Forwarding offers air and ocean freight forwarding, Supply Chain specializes in warehousing and distribution, and the e-commerce part provides services to online retailers. As you can see on the next 12-year revenue chart from 2010 until 2022, DHL has had quite the steady revenue growth over the period, and since the pandemic, its business has exploded, increasing overall revenue by 60% over the course of less than 3 years. This was due to the massive amount of online orders for which DHL is a major logistics player. The trailing 12-month revenue for DHL is $105 billion. The following chart shows the net income of DHL, and the chart is even better than the revenue chart. From about $3.5 billion in annual income, the company is now sitting on about $6 billion of net income per year, which is an increase of around 70%. This tells us that the business efficiency from a bottom-line business perspective has become better, which can be seen directly if we take a look at the net margin chart. Since 2020, the net margin has been a massive boost, going from 3 to 6%. The long-term debt of the company is $24 billion, while the equity is $18 billion. This gives the company a 0.75 DE ratio, which is below 1 and it is acceptable. But to be more comprehensive, I'll also look at the debt to EBITDA, cash to debt, and the short-term debt liquidity ratios. If I take DHL's total liabilities, both current and long-term, they stand at $45 billion, while the EBITDA is $13.9 billion. This gives us a total debt to EBITDA ratio of 3.23, which is very acceptable, as in this case I use not only the long-term debts of the company, but all of its liabilities. The cash on hand for the company is $5.13 billion, and the cash to long-term debt ratio is 21%, which is not bad. The current ratio for the company is 1.03, which shows that the current assets are just above the current liabilities, showing the short-term debt health is fine. The interest coverage ratio for the company is 8.5, which is much above 5, which for me is close to a minimum level. This shows the company's 1-year EBIT profits can cover all of its current yearly interest payments for 8.5 years ahead of time. If I have to place a score from 1 to 5 on DHL's debt management, I would place a 3. It is above average, but it is not exceptional. The ROE for the company is 21%, the ROIC is 10%, while the ROA is 7%. I give DHL an efficiency score of 4 out of 5. This is due to the above 10% on average returns on all these three metrics. I would give a 5 if the ROIC was 16 and higher and the ROA was 10 to 12%. What I really like about the company is that it pays a dividend, a very large dividend for the matter. as it is 4.5%. But to see whether it is sustainable, we must check the dividend payout ratio, which is 0.37. This means the dividend is equal to 37% of the company's earnings. This shows that the dividend is secure at its current state. Another good fact about the dividend is the growth over the last 5 years. The annual growth in the dividend is 7.7%, which is on pace with the official inflation rate. I give DHL's dividend policy and structure a 4 out of 5. The dividend is quite high, the growth is okayish, and the dividend payout ratio is below 50%. Last but not least, we must check the valuation of the company. Over the last 3 years, the PE ratio has fallen quite drastically from a high of 24 to less than 9 at current levels. As the fundamentals of the company have increased, the stock has fallen massively. This is quite the value play in my opinion, as the company has a huge moat, a good dividend, a low price to earnings, and a stable efficiency and debt management. The PE of 8.75 means only the earnings yield we get from DHL, if the current earnings stay the same, is 11.42%. We place on top of this the dividend and we get a 15.93% annualized business return. Even if the earnings fall by 20 or 30%, the company still will offer a very interesting return. The price to book value of DHL is also low with a 2.2. This means that about 50% of the company's value is sitting in its equity. All in all, I do think DHL is a massive company which also can be a potential good investment. I would definitely consider it as a buy for me. Make sure to watch the other videos here on the channel. Goodbye for now and until the following video.